Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Hello and welcome to Bazaar Morning Call. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I am Reema Tendulkar. With me is Nigel Prashant. Once again joins us from the Delhi studio. Guys, it's Friday.
Yeah.
Finally.
It's Friday, Prashant. How are you feeling?
The red tie, right? I think.
Are you ready to
what
come
did
back?
you guys do? I mean, yesterday was. I'm back tomorrow, Reema, and but I mean, just a waterfall decline yesterday, right? And Nigel will talk about the flows and the positioning, etc. But I couldn't find very much in terms of the cash numbers or anything of that sort. So very curious kind of fall.
Prashant.
I think. Yeah.
Besides the fall, Prashant, I'm sure you're looking at the global markets and hoping there's no action this evening or tonight, because tomorrow Prashant lands in Mumbai and he's back in the Mumbai News Center. That's a possibility?
Well, there is that Supreme Court decision. We've stopped talking about it on the
Nigel
tariff
made it
front.
seem so dramatic. It's like the Air Force One landing in Mumbai.
Kidding.
But Prashant, if the Supreme Court rules on the tariff, then perhaps you're back tomorrow in office.
Oh yeah, tonight, yeah? Oh,
Tonight, yeah. We've forgotten about it, but it's there.
Potentially a ruling, right? Last three dates, nothing, but I think maybe tonight, right? So let's take it from the top. It's not a good-looking screen, and I think we have to admit that, because it's a bunch of things. It's a combination of oil prices, which has spiked up, and you've got this entire software pack in the US, which is sold off once again. And I think that is the backdrop that you kind of sort of are waking up to this morning. I mean, it's not as if the day before yesterday, same time yesterday, we were talking about how IT stocks had, seen very small recoveries. It's not as if that helped. I mean, just look at IT stocks yesterday and the broader market as well. And this is what I'm talking about. I'll get to the global cues in just a bit, but, just to address yesterday's market, absolutely sharp cut, right? Nifty down about 1.4%. And I looked at the FPI number, the DII number. They're negative 800 crores, 500, 600 crores, but it's not a big negative. I mean, these are not large numbers. I looked at the positioning. I mean, and Nigel will talk about this in greater detail, but roughly, FI shorts in index futures, etc., are largely same. It's not very much changed day on day. So where is this selling coming from? And I think my sense is that perhaps is HNIs, retail positions getting cut, and so on and so forth, which does not show up in some of the numbers that we track every day. So that seems to be essentially what is happening right now. A lot of maybe forced squaring, positions getting knocked off because they have to as prices come off. And I mean, I think some offloading, and we'll talk more about this as we go on as far as some HNIs, etc. are concerned. So 25,454 is finally where we left off. Now let me just come to the overnight thing, right? Which is, and I'll start with software stocks. I mean, it's pretty much every day the same thing. And look at the ADRs, 3% on the Infi ADR, Wipro down about 2.6%. But the other US-listed, software stocks fell more. Globant down 7%, EPAM down 17%, Cognizant down about 3%, Accenture down about 4%. And this is not a great screen at all. For the Infi and the Wipro ADR, we'll have to sort of see what is the comparable rate here in India. But because prices have moved so rapidly, sometimes there is a bit of dislocation, of the rupee value of the dollar rate at close in the US, and we'll try and sort of get that to you in just a bit. But broadly, I mean, it's lower. That's the message, and some of the other names have sold off more. Okay, now oil, right? That's the other cue this morning. Oil prices $72, so about 2.5% higher. And the cues are straightforward. President Trump is essentially saying that Iran has 10 to 15 days. He's basically put them up on notice and saying that they've got 10 to 15 days at most to secure a deal. And they're saying that, well, And this is his quote, right? Make a meaningful deal or bad things happen. Now, that's classic Trump in that sense. And of course, I mean, all kinds of reportage, and I'm not going into details about how this could be not a quick affair like what we saw in Venezuela, but if it gets to it, it could be a long, drawn-out affair. So markets starting to price some of this so-called war premium in, and we're at about 72, and prices, we want oil prices lower, not higher, but right now, they are actually gone up. Actually, oil prices are up almost 7% in 2 trading sessions. That is yesterday and, of course, day before yesterday and yesterday overnight. Now, the equity markets closed absolutely flattish sideways. 0.25% lower on the S&P. Nasdaq was down about 0.3%. And you had lots of data. So some mixed kind of data. Jobless claims fell more than expected. The Philly Fed index was strong, but the trade deficit widened more. So it's no real clear takeaway, but mixed more than anything else. Dollar index was higher, and we're almost at about 98. So this one-way decline that we've been seeing in the dollar has halted, and we are actually now going the other way. And 10-year yield, nothing very much, 2 basis points higher. You had Fed's Miran, who's been asking for sharp rate cuts. And I'm only highlighting this is because he's been on the other end of the spectrum. Now he's saying, I don't think the Fed should cut rates in a very deep fashion in 2026 because some of the data that he's saying he's seeing is coming in stronger than expected. So that's that. Now I'll just leave the levels in here. But these are the same levels. Just one addition: the Nifty yesterday broke the 20-day moving average on the downside. So 25,540 was the 20-day moving average, and we are once again below it. The main support, and there's a 200-day as well, but there's a long, slow-moving average between 25,540 and the next support, which is 25,450. The 200-day also comes in. But the main one is this 25,450, which is the low that we saw recently. And we'll see what kind of comes of all of this. So that's it. GIFT Nifty will come up on your screen, gives you a quick sense of how we're likely to start, and then we'll kind of sort of pick it up from there to begin this last trading session of the week. 16, 17 points lower at this stage. I think there's some comments coming in from President Trump on Iran, and we'll address them in just a bit. But Nigel has walked across to the wall with the F&O positioning and, of course, some insight, intel about what really happened yesterday. Nigel, take it away.
Well, Prashant, sometimes the pitch is a little bit tricky, and so it's better to stand back. I guess that's what the DIs as well as the Nifty Bank in yesterday's trading session, and that's sort of a backdrop of geopolitical tension. So that war fear was getting priced in, and that explains why, in fact, we did see a lot of selling. This morning as well, crude is holding steady, and the dollar index is strong. Not a great combination from an emerging market like India's standpoint. But the flows didn't look that bad for the kind of fall that we saw yesterday. The Nifty ended at the day's low. The advanced decline ratio as well did drift apart all through the trading session. And by the end of it, if you looked at the institutional net sell number, it was close to around 1,300 crores with the FI selling, in trade. But the DI stepped back. And I think that's why you did see that the markets were under pressure in trade yesterday. What did the FIs do in the F&O market? Well, they added close to around 2 shorts for every 1 long position. The short positions continue at around 77% or thereabouts. On the stock futures, they added some shorts in trade yesterday. But the important point is they wrote calls as well, and they're shorting the index. So clearly, they're getting into a bit of a defensive mode on the future space, which is not such a bad thing. And because of the kind of call writing that we saw yesterday from the FIs and other market participants, the PCR has come down to around 0.7. Now, remember the start of this week, it was at around 0.64. It went dancing away to around 1.2. And from there, it's come back down to around 0.7. Now, in today's trading session, we could see it actually move to around 0.65 or thereabouts. And this technical level, when it gets extended on the downside, that's when you brace yourself for a bit of a bounce. Moving to the options data that was active, the 25,600 call, fairly active in yesterday's trading session on the downside. The 25,400 put as well was pretty much active in trade. Just punching in these levels, in fact, looking at the options data, you get a crucial levels that you're looking at. Support level, 25,250. You don't want this mark to get broken. So that's the important mark. That coincides with where the 200 DMA as well is at. So you don't want these levels actually to get broken out. That's the important range to defend. But I think we got resistance at around the 25,900 odd mark. So that's going to be a very, very firm resistance. And the bears will want to come in there and, protect that level. The Nifty Bank, yes, it had a bit of an off day. If the Nifty needs to bounce today, you need the Nifty Bank to perform. And that's a crucial mark, close around 600 points away from where we closed out yesterday. Till the 20 DMA holds out, you'll believe that the Nifty Bank will come in there, bat for the bulls, and help these markets at least consolidate and then drive higher. The Nifty IT index is going to play a very, very important role. It could start off near Friday's low, last Friday's low, going by what the ADR rates are suggesting, going by how the global tech names is as well sold out. But the bulls will be optimistic. If this level can hold out, they'll be optimistic that we can still see some bit of a short covering bounce. So there is some weakness to kickstart trade. I think the markets will be a little bit jittery because of the geopolitical tensions, but I expect at some point of the day that it should see some kind of support, given that the 25,300 is very, very close, which is a crucial support zone.
Thank you very much for that. On IT, EPAM and Endava, and these are seen as proxies for the Indian IT services companies, particularly for the mid-cap IT companies. They both reported numbers, and EPAM's guidance disappointed the street, which is why EPAM's share price was down 17%. But we'll talk more about it. We'll get you the details because of the implications it could have on mid-cap IT companies.